Are you thinking about buying a small business? Don't make a move until you've watched this video. We're breaking down the essential 8 steps of due diligence that could save you from a bad investment. Hi, my name's Trent Lee. I've sold over 600 businesses, and for the last 6 years in a row, I've been named the #1 business broker in the country for the most closed transactions, and I make these videos so that you can reach out to me whenever you're looking at buying or selling a small business. Step 1, review the financial records. First up, you need to review the financial records in details. This means examining financial statements like balance sheets, income statements, cash flow statements for at least the last 3 to 5 years. Verify the revenue, expenses, profitability of the business. Don't forget to look at the tax returns to make sure that the reported income and the expenses match up. Be careful if there's a significant variation between the profit and loss statements and the tax return. If the owner says there is cash that isn't reported on the tax returns, take it with a grain of salt. In other words, just ignore it. I would only recommend you base your decision and your valuation on what is actually on the tax returns. Step number 2, analyze the business's operations. Understand how the business works day to day. Review contracts with suppliers, customers, and employees. Assess how efficient and effective the business processes are. Most small businesses are really lacking in this and don't have processes, systems, protocols, or anything like that in place. This step will give you a clear picture of the operational health of the business. It's helpful to compare the operations and the financials of the business and benchmark them against industry standards. You'll need access to benchmarking tools to help make sure that nothing you see is too high or too low compared to, again, industry standard benchmarks. This is helpful because it instantly helps you know and be aware where there are potential problems or opportunities within the organization that you're looking at buying. As you work with professionals, they'll have access to benchmarking software for you. Step number 3, inspect legal matters. Now, this is important because you need to make sure that if there are any ongoing or past legal issues like lawsuits or compliance problems with local, state, or federal regulations. Review all the necessary licensing, the permits, the zoning laws to ensure that the business can operate legally. I can tell you from personal experience, just because a business is there and operating doesn't mean that it's legally allowed or could continue to be there. I've learned, again, from sad experience that you need to make sure that you justify and have legal experts guide you through this process. That means don't do it on your own. Rely on legal counsel to help you through this process. In fact, I wouldn't do any of this on your own. Rely on due diligence experts to help you through the entire process of your due diligence. Step number 4, evaluate assets and liabilities. Make a list of all the tangible and intangible assets, such as equipment, inventory, patents, trademarks. Assess their condition and their value. Also, identify all liabilities, including debt, leases, or any pending obligations. We often run into this, for example, in restaurants. Sometimes the dishwasher or the soda machine aren't owned by the seller, and they're leases that need to be either transferred or assigned or renegotiated by the buyer. This is key. Don't let the buyer or the broker convince you otherwise. Doing this is vital and important to you as a buyer. Step number 5, understand the market position. It's important to understand the current business market position. Analyze the competitive landscape, market trends, customer demographics, and the business's reputation. This will help you evaluate the potential for future growth and identify any market risks. Step number 6, examine employee and management structure. Review employee contracts, benefits, turnover rates, understanding the roles and responsibilities of key management and staff. Assess the overall organizational structure and the company culture to ensure that it aligns with your vision, or try and determine if you can change that, which often isn't easy. Is anyone overpaid, underpaid? What about family? Make sure to account for the fair market wages of any family who may be needing to be replaced in the business. Whatever you do, don't allow the seller or the seller's broker to convince you that the entire family wages are added back if they are actively working in the business. This will cause your expenses to be understated and your valuation to be overstated. Step number 7, check customer and supplier relationships. Evaluate the customer base, the relationships with key customers. Review agreements with major suppliers and vendors. Assess the stability and the reliability of those relationships. Are they crucial for the business's ongoing operating success? If so, you need to make sure that those are transferable without any damaging repercussions to you during that process. And finally, step number 8, conduct a site visit and interview. Visit the business's premise to inspect operations firsthand. It's unlikely you'll be able to speak with the employees prior to closing, so you'll have to rely on interviewing the seller here. Use the interactions to gather insights and confirm the information obtained during the due diligence process. And that's it. By following these 8 steps, you'll ensure that you have at least the basic comprehension and understanding of the businesses from a due diligence standpoint. This reduces risks and helps you make a more informed decision. As I mentioned before, this is really just a quick overview. Whatever you do, make sure that you work with a team of experts to help you through the due diligence process. And in fact, the entire buying or selling process. You should have your team help you guide you step by step through the process. I hope you found this video helpful. If you're interested in looking at more videos, check out my other videos on YouTube for a lot of different educational content about buying and selling businesses. Thanks.